So it's going to be with great pleasure that I introduce Derek MacMillan of Mac Insurance. For those of you who like hanging out downtown and going to Mercer Tavern, he's actually got the big sign on the building just south of Mercer. So it's that Mac. Mac Insurance is from MacMillan. And one of the things that we're going to start with, and this is going to be kind of your fair warning, this is going to be an important awareness, is that insurance covers some things and doesn't cover others. So Derek and I are going to have a conversation about what you should pay extra close attention to in your property, because the last thing that you want to have happen is to be in a situation where you have an issue with your property only to find out that you could have A, done some maintenance to it, and B, that it's not covered in the way that you thought, or you've got a situation with your deductible, or. So there's a perspective there that insurance will cover me no matter what. It's my limitless safety net, and no matter what happens, I'll be okay. That's not entirely the situation. So we're going to talk about insurance as it pertains to property maintenance, because again, we're playing defense here. We're making smart choices now so that you don't get dinged with huge portfolio impacting situations later. So Derek, I'm going to hand it over to you to give yourself a bit of an introduction and say hi to all of our guests here.
Hello, all guests. How are you? I'm Derek. Yeah, it's really intriguing. I'm in the insurance world, and probably my full passion is real estate. I think that's how me and James kind of connected. I've known Sean for 20 some years. Great guy. So nothing bad to speak about him. So yeah, I kind of got into real estate when I was 17 with my old man. We bought our first condo, and since then, same thing, kind of evolved in the residential and commercial side. So I do get kind of the insurance world as it relates to an investor. So hopefully that can help. That's kind of the intro for me.
Awesome. And Derek, can you tell us a little bit about Mac Insurance, just so that people, not only have a face to the name, but have a name to the organization?
Sure. So we're kind of second generation. I spun off on my own about 10 years ago. So we have locations in Southside, downtown, and St. Albert. So that's where our grassroots are, but we're licensed BC, Alberta, Saskatchewan. The gist is we have 2 registry locations, plus we do insurance, residential, personal insurance, commercial, and then life, and we have an investment department too. So we're kind of rounded to be able to help you out in many different ways. Yeah, we kind of started out with me when I jumped off my own, and now, well, it depends with COVID here, we're around 30 employees. So there's a lot of professionalism. There's a lot of guys that used to own brokers that are still working with us, and yeah, it's lots of fun. I love it. I'm a big nerd. So
you know what? I in our conversations, getting to know each other, that your passion for your industry shone through. So super excited to have you on the power team. And you know what? Let's get into it. Let's talk insurance. So the first thing that I want to talk about is what types of things can you sometimes see excluded from insurance policies, and what should people watch out for?
So the biggest things, and I got a little sheet here. I'm gonna make sure I'm watching it. So from what I've really noticed is even when you're house hunting, I find for myself, I'll check with an insurance broker, and a lot of times a price point will tell you a neighborhood that might have had issues. So the big 3 things I always get word about, and it's changed in the last 6 years, is windstorm, hail, and water, I'll call it, but sewer backup and flood. Mm-hmm. So we'll cycle back, and you think about the Calgary floods. That's kind of the main flood that we always know in our recent history. So technically, just about nobody was covered. The government should have jumped in like they are in this COVID world, and that would have been almost a media nightmare. So the insurance company is basically paid flood, but now they won't do it again. So it's called either flood coverage, likely on your commercial policy, or overland water. So you have to know where you live and if you're willing to take that portion of the coverage and usually limit it. So how much are you going to have? So spin it the same with sewer backup. If you're in a high sewer backup area, you'll often get a quote that has $400, $500, $600 of just water coverage. That just shows that area is showing sewer backups, but you know, I'm going through one with a friend of mine who's not insured right now, but he has a $10,000 sewer backup limit, and his basement's completely done. His just restoration of the sewage itself was 11,000. So then he has to redo his basement, and all the contents are gone. So no contents can be salvaged when it's in sewage, whether you like it or not. It's
for obvious reasons.
Yeah. And then same, you go back, hail is probably the number one loss leader in insurance right now. I would have thought water, but hail's been more predominant, especially in that Cochrane area. So there's a few hail belts that really go through, and you'll watch, they'll limit the hail coverage. So any contractor can tell you hail can go through vinyl siding in the roof and cause huge dollars of damage. So if you have a $10,000 limit with $2,500 deductible, you're not really ahead of the game. So those are the things you really, really want to work on. And then the windstorm. So same thing as hail. Less prominent, less of a cost, and they're excluded less, but they are now separate coverages for all insurance companies. And that was designed to target really bad areas, the floodplains, the hail belt, and kind of that central valley that gets tons of wind.
Yeah. Now I'm gonna circle back to a point that you made that this is a really interesting tip. Now, for those of you who are from BC, it's a little more common in BC to have a condition in your contract that's like subject to verifying insurability of a property, especially with the condos in Vancouver. In Alberta, it's not as common of a clause, and in the Standard Alberta Real Estate Association agreement, it's not baked into the contract. But we do know that there's a clause that really is a catch-all, which says subject to buyer's satisfaction with a home inspection. Now, that's very open language. Is the buyer satisfied? What counts as a home inspection? So one of the things that we're starting to see and we're encouraging more of, especially if you're in kind of those locations where you think, just like you said, Derek, there could be a higher premium, passing the property along to the insurance broker as part of your inspection condition to make sure that things are above board.
Yeah, it's just getting a quote. A lot of times price will drive questions. So if you have a low price, often you'll have maybe a competitor that just gives you bad limits. But if we kind of on our side try and give policy limits everywhere, so you don't have any loopholes. And if you're seeing a big price, then you have to question the neighborhood, because right now insurance companies, those six postal code digit rate. So it's not just like Edmonton East, they go right down. They have analytics and data that really get into those 6 digits. So it's
Wow.
impressive. We don't see it all, but you can tell by their rating.
Totally. Yeah. So I mean, we can almost just send you the MLS sheet, and then you can run the postal code to see what kind of a neighborhood the property's in.
For the most part, yeah.
Very cool. Very, very cool. So I think we're going to start seeing that to be a little more common. Now, one of the pieces that I want to have a chat about is a very specific one, which is water leaks through cracks in the foundation. So let's talk about insurance coverage for that specific thing.
It'll be honestly is like my nemesis of the industry. It's not covered. We can't really find coverage. So it's funny that you prepped that. So I texted 3 or 4 of my contractor buddies, and I'm like, can you detect it? And they said, no, just look for early signs, a little bit of damping on the drywall. It's easier when a basement's undeveloped, but constantly I see that, like, hey, my basement's flooded, I don't know where it's coming into. And you're like, oh, the whole industry doesn't cover it, but yet it's really hard to assess. You really have to pay attention. And an investment property, that's where the walkthroughs really, really come in handy, because you can go downstairs. Not a lot of tenants are looking at their walls, let's be honest. So as a property owner, you want to make sure that that's not a headache for you.
For sure. And you know what? I definitely threw that one at you as a layup, because, guys, listen to what Derek is saying. This isn't a company-specific policy. Insurance doesn't cover foundation leaks. That's a scary thing. And the amount of damage a foundation leak can do is amazing. So we're going to segue into probably our next speaker talking a little more about foundation health tips. But, I wanted you guys to hear it, straight from the professional right here, that that basement leak foundation is, you think you're going to get your insurance covered, but it's not going to be. So that's something to be super aware of. Now, Derek, in terms of, I want to switch into another kind of subsection of that, and that's the concept of property. For lack of a better term, let's say negligence. So let's say that somebody's not maintaining their property, and something that they probably should have maintained, like, for example, let's say that they let their gutters get all clogged up with leaves, and then there's a waterfall down the side of the house, and there's a whole bunch of damage done to the inside of the house or the walls or the roof because the gutter's backed up, or something like ice damming. Where does ignoring maintenance on your property that then results in maintenance specific damage fall from an insurance perspective?
So we always have to have an insured peril or a reason for the loss to be able to cover a loss. So I always like to use the situation where we're not a warranty or maintenance company. If you take your roof and you have hail damage and your roof's 20 years old, they're going to depreciate the roof and give you nickels, like really nothing. And then you're upset because you did have hail damage, but technically there was really just no coverage in place. But the one I like to use that's out of pocket expense is your hot water tank. So
Right.
if you leave a hot water tank and you just take it to the end, then it explodes. They're not going to cover the hot water tank, which is about, $1,000 give or take. Your deductible is going to be that. You'll pay more premium. You probably have a lot of downtime in your investment. You probably have to subsidize rent. The cost of that doing that was well over the $800 or $1,000 for the hot water tank. So if you just were preventative and had like a checklist of when things are due, you'll be much better off, because at the end of the day, the resultant damage is covered, but the maintenance is not. So a lot of times you will get coverage for what it damaged, but the actual thing doesn't hurt. But any claim, no one loves them. They hurt your house whether you live in them, or they hurt your house whether your renters are living in them or leave because of it. So
Makes perfect sense. And again, that's a really important takeaway, guys, to understand that, like, one of the common themes for the first half of our conversation here is a little bit of maintenance. Derek was talking about having a checklist is going to go a long way to saving you big, big bucks. Because, Derek, what's the average deductible on a policy these days, would you say, for a rental property?
yeah, 2,500 probably. It used to be 1,000, but everything's kind of creeping up, and it's usually
Right.
for premium savings.
Absolutely it is. So, a lot of the maintenance stuff we're talking about, it makes more sense to spend a few bucks to maintain it than, because if the damage is under, that. So George asked the question that I'm trying to get at, and where's the decision criteria to make a claim or not make a claim? So if your deductible is 2,500, what's a good rule of thumb of how much damage you need to see before it's worth paying your 2,500 deductible and getting the amount above that covered? Because I'm guessing if the damage is $2,700, you're not going to spend a $2,500 deductible for a $200 claim, right?
No, and usually you have a premium kickback that you'll have to pay. You lose a discount, so you'll have to pay back into the policy for 3 to 5 years. So we'll assess that, but at least double is kind of an easy way to say. So if you have $1,000 deductible, I say like 2,500. I wouldn't even call us, and then 2,500, 5,000, 5,000, 10,000. So you got to think, if you have a $10,000 loss and you're already paying $5,000 deductible, and then you can expect your rate of return to be worse because your investment, or because your
Premium's going to jump up.
yeah, and the claim's noted on the file forever. So when you sell it and the next guy does it, he can see that. So
Totally. So yeah, I think that's a good rule of thumb, is at the bare minimum double. And that's a fantastic tip, is ask your broker, how much of a discount am I going to lose? Because if the amount you're getting in terms of claim is wiped out by an increase in premium for a 5-year period, it sucks, but it might actually be more financially responsible to just bite the bullet and pay for the repair.
yeah,
So yeah, that's a fabulous insight. And as far as maintaining your property goes, this is the kind of perspective that, it doesn't come into the conversation very often on, like, how do we work insurance into the conversation? So Derek, I really appreciate you jumping in and giving us some of your insights. Jen, if once we take Derek off, you can just put his contact info in the chat window so people can start reaching out and, asking questions about what's going on in their policies. Now, Derek, if someone brings you a policy they have, you're able to take a look at it and just give them some advice on where the holes are, right?
Yeah, it's usually right on the deck page. So the declaration page, as you call it, it basically has your address, but more importantly, all your limits, and it'll be on the main page. So you always want to be trying to get a comprehensive policy. Those are the big kind of three words. You have basic, which is basically fire. It's not very good. Broad, which is okay for investment properties, and then comprehensive would be the best. So watch for wordings of those, and then we can take a look at the limits and sublimits.
Awesome. And the last question is, they said claim noted on file. How do you get that info? Is there like a Carfax for houses? That's a really cool question.
Yeah, so not all insurance companies abide by it. It's through CGI, which is a pretty big company, and so no different than we put in your driver's license number. You get all your everything you've done. Not all companies are as diligent on the property side, but you can punch it in, and it'll show claims, every claim noted from that guy, from that property.
Cool. There's your answer. Well, Derek, from me to you, thank you so much for coming and sharing those industry inside tips with us. I mean, that's great perspective, and it's stuff that, all of those investors that are listening today, this is the kind of stuff you guys need to hear, because we don't always talk about maintenance from an insurance perspective, but it's really, really important to keep your head wrapped around this kind of stuff.